Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, March the 8th. My name is Eric Wilkinson. Some of you all may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on. With some economic data, well, not so much. We don't have a whole lot of economic data. It's actually one of the weakest weeks for economic data that I've seen in quite some time. And across the pond, really just not so much. We did get German factory orders month over month coming in at negative 3.9%, expected to be a negative 1.9%. So, full 2 percentage points below what was expected. And they also revised last month's number down from a positive 3.8% to a 3%. So big pullback on the revision, and expectations for this number did not come in line, much lower than expected. These factory orders, we've been talking about this for quite some time. We're starting to see a lot of factory orders kind of pull back here after the holiday season, which we would expect a little bit, but we're seeing much more of a pullback than what we would like to see, especially across the pond. We're starting to see a bit what looks to be kinks in the armor of that economy expanding. All right, then back here in the United States, we got the unemployment claims came in at 231,000, expected to be 221,000. So 10,000 more than expected there. That is claims. That means people claiming unemployment, unemployed people. That rising, not very good when people are going out and claiming unemployment. That for the economy. It means that they think that they're going to be able to find a job, but they can't. Then natural gas storage just came in at 57 billion cubic feet, expected to be 58 billion cubic feet. So pretty much in line with expectations there. Onto the overall markets, we've got crude oil moving off a little bit by 57 points, still in the 60 handle, and this 60 line in the sand, we talked about this several times. It is more of a psychological number, but nonetheless, it has acted as support and resistance. It's acted as resistance on the way up, acting as support now on the way down several times. So that 60 handle really being defended by the bulls right now. We're going to have to wait and see if we can pierce through that. But this morning, it came down and came just shy of touching that and then rallied away. So pretty key point there. All right, gold futures came down. We touched the 78 Fibonacci level. We talked about this. Very messy right in here. All of these lines coming together right in one spot is going to be a major hurdle for anybody trying to get below this, the bulls trying to get above or stay above this, I should say. The bears trying to push it below, or the bulls trying to stay above it. So gold futures really in a tug of war right now, off by about $6 right now, barely below that Fibonacci level, but the key is going to be whether or not it settles there. All right, on to Bitcoin futures, back below 10,000. We've talked about that. That is the big line in the sand that everybody wants to battle over. I would expect this point of control to move slightly lower, right down back to around 10,200, 10,300-ish area, right in this, because you can see the volume has popped above that. So I'm surprised that the line has not moved down yet. It should be right in line with this. Something of note yesterday, saw rumors, as a matter of fact, I tweeted it out, that the Tokyo whale, the Tokyo Bitcoin whale, was seriously selling yesterday, almost $500 million in Bitcoin, and still supposedly has more to do. Doesn't look like there's as aggressive today, but supposedly that Tokyo whale, who's one of the biggest Bitcoin traders, was really dumping inventory yesterday. Then on to the VIX. VIX coming off a little bit. We're still, 16. It did come down below the 200-day this morning on the markets, but starting to see VIX start to come up a little bit after the overall markets tried to claw their way a little bit higher and have since started losing a little bit of ground now. This being said, you can see right here we were much higher, came up, tested the 9-day moving average in the Dow Jones Industrial Average, and have since failed close to unchanged. Up 45 on the day. Still in the trend channel here, getting a little bit messy in and around here. It's really not giving us a whole lot of directional cues at this point. Then on to the NASDAQ. NASDAQ up 41 points on the day, going up to test the value area high. This was that very messy stuff I was saying. It's really hard to say what these charts are trying to say right in and around here because it's very messy. We've got counter-opposing dojis, but when you get that inside of a move, kind of like we got down here, it is very hard to discern which direction we're going to go. Now today we're getting a little bit of a blast off and going up to test the value area high. Looks like the war on trade, like the tariffs, has kind of started subsiding as Canada's kind of off the hook. So is Mexico. I think that it's pretty much a chess match on this trade tariff thing. I don't really think that Donald Trump is necessarily going to go to the root of tariffs, but I think he's trying to shake up things around there. So we'll have to see as the time goes on. I think he's trying to use it as a political pawn, if you will. Then on to the E-mini S&Ps, positive on the day. Earlier today, this is the first time we're really starting to see positive moves in the E-mini S&Ps, but it is being held down by the this Fibonacci level right here. So right there at around 2738-ish, let's call it, that is lining up with the 200-day moving average. When they line up like that, that makes it, you can think of a wall being double as high, if you will, to get over that hurdle to get over. So when you get multiple resistance areas lining up, that increases that wall or that hurdle height that you have to get over in order to get through it. And we are right up against that right now with the E-mini S&Ps. If we look at the daily chart, which is the 30-minute bars here, each one of these blue sections, a day section, last 10 or 15 days here. As we can see, overnight inventory did get long, but they didn't try to really flush it out right away. Took about a half an hour into the day before we started flushing out some of those longs. I don't think that they really flushed them out too far. As you can see, they were getting long down here, so we didn't flush them all the way out. And a very tight range today. And again, bumping up against this 23 Fibonacci level that I talked about, which coincides with around 2738 in the E-mini S&Ps, really acting as resistance again today. Now, on to a few things that I've done. I talked about this yesterday in the daily market commentary with Honeywell. I was working an order in there. It actually, I had to start chasing it almost immediately after the market commentary got over with. And if you remember, in my margin account, I had on the March 155 calls in there. Originally sold them for 38 cents. I was working at about an 11-cent bid yesterday. Came down very close to it. I think it was actually 11 bid at 13 at a one time. And then the market started pushing away. So I rallied up, or I bid it up and bought them back at 15 in my margin account. Pretty much similar situation in my IRA as well. But in my IRA, I had it on as a defined risk strategy, if you remember. And so I was short the March 155 calls, long the 162.5 calls in there, and just got out of the March 155 calls, left on those 162.5 calls because they were pretty much worthless. Bought those back for 15 cents as well for a Honeywell. So out of Honeywell, other than in my IRA, I leave on those long options that were defining my risk just because it doesn't make sense to take them off for the commissions. And therefore, I just usually leave those on. Starbucks also tried to get out of this yesterday, or yesterday morning, but ended up getting out of it early on in the day, but after the daily market commentary almost immediately. We got a lot of things that were really bouncing yesterday. Same thing happened to me in Costco for the earnings trades, and I'll talk about that here in a minute. But with Starbucks, let's get into that. In Starbucks, if you guys remember, I had on the March 58.5 calls that I was short in my margin account. And with that being said, those March 58.5 calls, I sold them at 35 in my margin account, bought them back for 18 cents yesterday, pretty early in the day, but it was after the market commentary. And then in my IRA, I had on those same March 58.5 calls that I was short, but I was long the 61.5 calls to define that risk. In my margin account, like I said, I covered those 58.5 calls for 18 cents. Same thing in my IRA, only covered the March 58.5 calls as well. And I left on the 61.5 calls just to ride it out. You know, stranger things have happened. We've seen it happen on the last pullback. I had a couple of those still hanging in there and did very well with them. So I'm sticking with that mantra. The other thing that I tried to do, and I talked about this yesterday, was in Costco. We got the big market sell-off yesterday in Costco, and I was able to get down here, and I was trying to sell, I think it was the 170 or 175 calls. I was trying to do a pick 'em between those two. That being said, as soon as I started putting in those orders, I was thinking I had such a great trade on because I was well below even this Fibonacci level, seeing this one act as support, knowing that this had another support. It was like, you know, two blockers in front of me. Well, the market started rallying up and away, and I wasn't able to get my location of those strikes, so I let it go. But, you know, of course, today it would have worked out quite well. But, you know, that's what happens. You know, I picked my strikes. I thought I had a great location. And then when it started getting a little bit worse, I couldn't bring myself to going out there and chasing that market. So I just left it off and thinking maybe we might come back down later in the day, and never really happened. So no trade in Costco, and we are very close to winding down the earnings season, so not a whole lot of trades for tonight, and it being a Friday, just really nothing going on for tomorrow morning. Thursdays and Fridays are pretty light, and so are Mondays. Usually we get the bulk of them Tuesday, Wednesday, Thursday, and now that we're winding down to the end of that, where all the good ones, it seems like, or at least many of the good ones, are past us, seems like earnings season should be winding down. So, well, keep looking for some good opportunities, but that's about it. Friday's webinar is going to be on the long straddle, you guys. When and where do you use the long straddle? A lot of people love it. Very easy strategy to implement. You know, you just start doing the at-the-money strikes, right? Well, that makes it easy. No, it doesn't. There are several different factors that come into play when you're doing the long straddle that you have to know in order to increase your probabilities of success. If you put this on in the wrong environment, with the wrong duration, you are really setting yourself up for some disappointment. So check it out at ProTraderStrategies.com. And if you can't take that, take it easy. I don't know if you got that one. There we go.